Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Terra Revival. The new Terra blockchain begins producing blocks, and the new Luna coin lists on major cryptocurrency exchanges. Is it going anywhere? Ethereum Emergency. Shortly after announcing a summer merge, Ethereum developers discover the beacon chain to be producing bad blocks. What does this mean for ETH? Litecoin Privacy. The silver to Bitcoin's gold gets a layer of privacy, provoking reactions from crypto exchanges in heavily regulated jurisdictions. Will a recent partnership protect LTC from delistings? FTX Making Bets. Cryptocurrency's fastest-growing exchange teases big-name buys as CEO Sam Bankman-Fried prepares to spend up to $1 billion on US politicians. Why this could be a good thing. Mad crypto money. Crypto VC Andreessen Horowitz announces a record-breaking crypto fund, while crypto projects raise hundreds of millions of dollars. Here's where all the money is going. Tether Troubles. After $10 billion of USDT is redeemed for dollars, crypto's largest stablecoin issuer continues to cautiously expand its operations. Everything you need to know. And a closer look at last week's top-performing cryptos and where they could be headed next. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, the Terra community approved a proposal by Terra co-founder Do Kwon to revive the Terra blockchain, and about a day later, its mainnet went live. The version of Terra that collapsed has since been renamed Terra Classic, with its Luna coin having the ticker LUNC and its UST stablecoin having the ticker USTC. The new version of Terra will retain the original name, and it has Luna as its only native coin. No decentralized stablecoins exist at the protocol level. Given that the only reason people were still buying LUNC or USTC was to participate in the snapshot to receive a portion of the initial supply of new Luna, both LUNC and USTC have continued to crash. By contrast, Luna is showing signs of life, with a price that's holding steady at around $5. This gives Terra a market cap of $1.2 billion, assuming 210 million Luna are in circulation as per CoinMarketCap. As I mentioned in my video about Terra Classic's collapse, many in the Terra community had no choice but to rally behind the new chain, as it represents their only hope of reclaiming some of their lost funds. As such, Luna is likely to see a lot of sell pressure as its supply gradually unlocks, and it's not currently clear whether there will be enough demand to keep Luna's price from falling below its $5 support. For now, Luna has the wind at its back as it continues to list on major cryptocurrency exchanges, and it looks like almost every single one has signaled its support for the project in some way. Similarly, many Terra projects have begun to redeploy their dApps on Terra, and infrastructure service providers are likewise calibrating their codes to support the new chain. The only problem is that Terra's implosion has attracted the attention of regulators around the world, and any regulatory actions against the entities behind Terra could take away its initial momentum. Not only that, but it's very unlikely that investors will be all that interested in pouring large amounts of money into Terra given its recent history. The same can't be said for Terra's projects, however. Put simply, if Terra's projects can create enough organic demand for Luna, Terra may have a chance, albeit a slim one. The real question is whether Terra will be able to compete with all the other Cosmos ecosystems out there, especially as we enter the depths of the crypto bear market. More about that in the description. Now, even though crypto is in a bear market, there are many bullish milestones on the horizon, and one of them is Ethereum's transition from proof of work to proof of stake in a process known as the merge. The assumption there is that ETH will become a more appealing asset, particularly to institutional investors who are sensitive to sensationalist headlines about the energy use of proof of work. As many of you will know, Ethereum's core developers recently announced that the merge will take place in August, so long as, quote, everything goes according to plan. Well, unfortunately, last week it was revealed that not everything was going according to plan, and that's because Ethereum's beacon chain suffered a temporary block reorganization. For context, the beacon chain is basically a copy of the Ethereum blockchain that uses proof of stake instead of proof of work as its consensus mechanism. As for the block reorganization, the plain English explanation there is that validators on the beacon chain briefly began producing two conflicting copies of the beacon chain, specifically 7 blocks. While this temporary fork often occurs because of a bug or the intentional actions of malicious validator nodes, in this case it seems to have been caused by a difference in software versions for validator nodes. Whatever the reason, the potential implications of the beacon chain reorg on the August deadline for the merge were enough to spook many ETH holders into selling. This selling caused over $150 million in liquidations, which further suppressed ETH's price action. Never mind that the rest of the crypto market was already taking a beating because of macro factors. Although ETH has recovered a bit since its dip, it remains well below the 2K support level it had been holding for over 2 weeks. For what it's worth, $1,700 seems to be another strong zone of support. In terms of what the reorg means for the merge timeline, this is still being assessed, but the fact that Ethereum developers are now discussing delaying the difficulty bomb suggests there will be a delay. If you're wondering what else Ethereum has been up to these days, you can check out my most recent update about the project using the link in the description. Now, speaking of famous altcoins, Litecoin recently implemented a privacy protocol called Mimblewimble that makes it possible to send private LTC transactions. If Mimblewimble sounds familiar, that's because it takes its name from the tongue-tying curse in Harry Potter, which scrambles a person's speech so that it can't be understood. The Mimblewimble privacy protocol was introduced by an anonymous individual in 2018, and up until recently, the only cryptocurrency that had implemented it was the Grin privacy coin. If you watched my Litecoin update last year, you might recall that Litecoin's version of Mimblewimble includes another technology called extension blocks, which acts as a sort of sidechain to the main chain. This means that Litecoin did not become a privacy coin when Mimblewimble was implemented earlier this month. Rather, it merely introduced the option to make LTC transactions private on its sidechain. Even so, this was enough to make cryptocurrency exchanges in South Korea question whether they should continue to offer LTC in light of Litecoin's recent upgrade. This is mainly because South Korea has some of the strictest crypto regulations in the world, and there are concerns that LTC's privacy features could undermine the KYC and AML regulations in place there. Shortly after these exchanges voiced their concerns, blockchain analytics firm Elliptic announced that it had become the first to support Litecoin's Mimblewimble sidechain. According to the announcement, quote, Elliptic solutions do not seek to trace or de-anonymize confidential Litecoin transactions. Instead, they allow businesses to identify whether a Litecoin transaction or wallet includes funds that have made use of this privacy feature. Now, this obviously begs the question of whether any Litecoin wallets that interact with the Mimblewimble sidechain will be blacklisted, meaning they won't be able to send LTC to cryptocurrency exchanges. If this does come to pass, the first place it will be implemented will likely be South Korea, and it could foreshadow the rollout of the same LTC restrictions for crypto exchanges in other countries. In any case, many are hailing Litecoin's privacy upgrade as a pivotal point for the crypto project, as it technically makes LTC the most accessible crypto with privacy features. As for me, I'm wondering whether we could ever see a similar privacy protocol find its way to Bitcoin. Now, this wouldn't be entirely out of the question, given that Litecoin has long served as Bitcoin's de facto testnet. Then again, some would argue that Bitcoin's Lightning Network already provides some degree of privacy protection, and you can find out more about that using the link in the description. On the subject of crypto exchanges, FTX recently announced that it's planning to spend billions of dollars to buy other companies that are relevant to its operations. The news comes shortly after FTX said its exchange would be supporting stock trading, and according to Decrypt, FTX is in talks to outright acquire a stock trading platform such as Webull. This move by FTX isn't surprising, given that other cryptocurrency exchanges have recently also announced acquisitions of other companies, namely crypto exchanges outside the United States. Some exchanges, such as Binance, have started taking large stakes in companies that aren't at all related to crypto, but could help them in other ways, namely increasing brand awareness. FTX has been raising the bar in this regard, however, and that's because CEO Sam Bankman-Fried and co-CEO Ryan Salam have been donating tens of millions of dollars to US politicians and political entities. What's interesting is that they've been sending this money to politicians from both political parties. That can only mean one thing, and that's that FTX is trying to influence crypto policy and regulations. If you watched my video about crypto lobbying, you'll know that this is entirely legal, and it's something that's being done in some way by just about every single wealthy individual and corporation. The sad reality is that this is how most policies and regulations are shaped these days, but the silver lining is that the involvement of FTX and others reduces the chances of a crypto crackdown. Case in point, Sam has testified to US politicians on more than one occasion about crypto policy, most recently to defend the trading of crypto derivatives in the face of the CFTC, the derivatives regulator. This influence is why Sam recently noted that he's planning on donating $100 million to various politicians when the next US election comes around in 2024. What's crazy is that Sam also noted that he's willing to donate up to $1 billion to whoever opposes former US President Donald Trump, assuming he runs again. As highlighted by Cointelegraph, this would make Sam the largest individual political donor in history, breaking the previous record by almost 4x. Now, many are questioning whether this massive donation would truly be made for the sake of shaping crypto regulation. However, I should point out that the former US president wasn't exactly pro-crypto. Sam also specified that he's, quote, looking a lot less at political parties from that perspective and a lot more about sane governance, particularly in relation to the things that Sam is personally passionate about. My only hope is that Sam supports the politicians who are pro-crypto, and if you're wondering which ones they are, you can find out by watching one of my many crypto hearing summaries. They'll be in the description. Meanwhile, on Wall Street, institutional investors seem to be as hungry as ever for crypto. That's because crypto VC Andreessen Horowitz, or A16Z, managed to secure a staggering $4.5 billion for its latest crypto fund, despite the crypto market downturn. In the blog post announcing the aptly titled Crypto Fund 4, partner Chris Dixon explained that the VC is convinced crypto is on the cusp of entering a golden era, which is why it wanted to, quote, go big. Chris specified that the massive money pile will be ploughed into, quote, Web3 games, DeFi, decentralized social media, self-sovereign identity, Layer 1 and Layer 2 infrastructure, bridges, DAOs and governance, NFT communities, privacy, creator monetization, regenerative finance, and more. Nice to see that privacy made the list. Speaking of A16Z, if you want to know how it views the crypto markets this year, then I have a video for you on it. Anyways, Andreessen Horowitz wasn't the only VC to announce a crypto fund. Another crypto VC from Singapore announced a $100 million fund, which will be directed towards crypto projects in the metaverse niche, presumably those building on Solana and Algorand, given that the firm was an early investor in both smart contract cryptocurrencies. A team of former Binance executives also announced a $100 million crypto fund of their own, and they specified that they'll be allocating this capital to crypto projects that concern, quote, markets where people are still struggling from the underdeveloped finance and banking system. A couple of individual crypto projects raised some mad cash too, and one of them was a new venture called Flow Carbon, which raised $70 million from various crypto VCs. As the name suggests, Flow Carbon is a crypto project that focuses on carbon credits, with its Goddess Nature token being the first carbon-backed cryptocurrency. Fun fact, it was founded by the former WeWork CEO, and if you don't know what went down there, I'll leave some links in the description. The other crypto project to raise some cash was Starkware, a Layer 2 scaling solution for Ethereum, which raised $100 million from various crypto VCs. Because the Starknet Layer 2 appears to be lacking a token, this massive raise tells me that a token is a possibility, especially since Optimism recently airdropped its own token to its Layer 2 users. If you want to learn more about airdrops and how you can find them, check out my video about them using the link in the description. Anyhow, when it comes to crypto billions, Tether is at the top of the list, literally. That's because Tether issues USDT, the largest stablecoin by market cap. There are, of course, many questions about where all the billions backing the USDT in circulation actually are, and even more questions about the quality and quantity of the assets backing USDT. This uncertainty seems to be the reason why close to $11 billion of USDT has been redeemed for dollars over the last week. And it all began with Terra's collapse. With regulators itching to crack down on stablecoins in the wake of UST's depegging, USDT is in the spotlight, and this has many USDT holders fleeing to stablecoins perceived to be safer, like USDC. What's funny is that many have interpreted this as a sign that a run on Tether's reserves has begun. But if you're subscribed to my weekly newsletter, you'll know that I take this as a sign that a historic transition is underway. You see, for a long time, the crypto industry was concerned, if not convinced, that if lots of people started cashing out their USDT for dollars, Tether would eventually fall short. This would lead to a collapse in confidence in cryptocurrency's largest stablecoin, which would in turn bring death and destruction to the entire crypto market. Instead, what we're seeing is a slow-motion flight to safety from USDT to stablecoins with more transparency, something that's happening voluntarily without regulatory intervention, mind you. In retrospect, the transition away from USDT was inevitable, but that doesn't mean Tether isn't trying to stop it. It's still expanding USDT to other blockchains and continuing to introduce alternative stablecoins. Whether these new initiatives will increase the dwindling demand for USDT remains to be seen, but the amazing thing is that Tether could easily regain its lost clientele through free market competition. Improving transparency and registering with regulators are things that Tether can and probably will do, because it's the only way it can remain competitive, and it would be good news for everyone. As stablecoins like USDC and BUSD continue to grow, the pressure on Tether to compete will only continue to increase, and risks associated with a crackdown on USDT will only continue to decrease. I count this as another bullish milestone to look forward to during the crypto bear market, but let's just hope BlackRock doesn't take control of USDT's competitors. More about that in the description. Turning to the charts, we can see that BTC continues to bounce around that strong zone of support around 29K. On the weekly, we can see that BTC posted its 9th consecutive week of losses, the longest losing streak for Bitcoin ever. So, congratulations on being a part of history. Looking forward, there isn't much to see. We're likely to continue bouncing around these levels for the short term, at least until the Federal Reserve announces its next interest rate hike next week. Last week's top-performing cryptos were Bitcoin Gold, Ethereum Classic, Tron, Unised Leo, and Aave. Talk about a bear market. So, starting with Bitcoin Gold, there isn't that much to say as it's one of many Bitcoin forks with limited exchange support. The Bitcoin Gold Twitter account also hasn't posted since July last year, which leads me to believe that the current price pump is nothing more than manipulation. Next, we have Ethereum Classic, whose ETC coin is seeing a slightly more legitimate rally that's presumably rooted in the implications Ethereum's transition to proof of stake will have on Ethereum Classic. I say slightly more legitimate because the Ethereum Classic Twitter account also hasn't tweeted in over a month, which really makes me wonder whether the current pump is truly due to speculation around the merge. In third place, we have Tron, whose TRX is rallying on the rapid growth of the USDT stablecoin, another algorithmic stable that was inspired by Terra and offers yields that are even more suspiciously high than Terra's anchor protocol. Then we have Unus Leo, which is the exchange token for Bitfinex. Leo seems to be pumping because of the increased trading volume on Bitfinex following the listing of various cryptocurrencies, including Terra's new Luna. You can learn more about the pros and cons of exchange tokens using the link in the description. I digress. Last, but certainly not least, we have Aave, one of the largest DeFi protocols by total value locked. As far as I can tell, the Aave token is rallying because of the release of an exclusive NFT available only to users of the Aave protocol prior to September 2020. Those were the days. Unfortunately, Aave's price has been in a slow decline since May last year, as have many other DeFi-related crypto tokens. The good news is that Aave seems to have found some support level around the $80 mark. Let's hope this support holds for the foreseeable future. And that is all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and the bell icon too. Now, just a heads up that there's less than 48 hours left to try your luck at winning one of 10 prizes of 0.1 BTC. That's around $3,000 a piece, which is a pretty penny. Additional details can be found in the description just below me. Thank you so much for watching, folks, and I'll see you all in next week's episode.